The next thing that we now look at is return of loss. Now let me explain the significance of this particular section to you. Just like a business can earn income, it can also incur certain losses. Under the Income Tax Act, in order to provide benefit to a person who has incurred certain losses, there are provisions which provide that if suppose during the year you've earned income from one particular set, say you've earned income under the head profits and gains of business and profession, and you incurred loss, say under house property, these two can be set off and you are taxed only on the net basis. The idea behind doing this thing is that the person should be taxed only on a net basis. Let me give you an example. Suppose I am an individual, okay, and I earn income from business and profession during the year, which is say 5 lakh rupees. However, at the same time, I also incur loss under the head income from house property. So what happens? Say suppose my business profit is 5 lakh rupees, okay, say my PGBP, there is a profit of 5 lakh. At the same time, I have say a short-term capital loss. I'm not taking in house property because there are certain rules governing the set off there. There is a loss of 2 lakh here. Now, insofar as this particular person is concerned, what he has earned during the year is only 3 lakh. Now, it would be unfair to ask him to pay tax on 5 lakh as against 3 lakh, which is the net cash he's earned. This is basically what is called set off of losses. You would have read this in your inter, but I thought let me just clarify this. Now, this was the situation when the net difference between these two numbers is a positive figure. What if instead of 2, this was 12 lakh? Then this person would have actually made a loss of 7 lakh. Now, to maintain parity, what the income tax law says is that suppose you've incurred this loss in year 1, you are allowed to carry this forward, and unless and until you actually earn 7 lakh rupees, you're not supposed to pay taxes. This is what is called carry forward to next year. And what is the benefit of this? The benefit of this is that if this carry forward was not allowed to me, then what would have happened? Then basically I would have kind of paid taxes the moment I would have earned any income here. Suppose I would have earned 500,000 here. I would have been asked by the tax office to pay tax on this. But because of this carry forward, what happens is I reduce this 7 lakh from here and I get a loss of 2 lakh. Since there is a loss, there is no tax payable. So the benefit of this set off and carry forward is that you are allowed not to pay taxes unless and until your limit is exhausted. Now, let us kind of move back. Okay, let me just clear this. So, a return of loss, now I'm reading it from this particular stuff. A return of loss can also be filed within the time allowed under section 139(1) or thereafter in the prescribed form. Now, what is the time allowed under section 139(1)? This we have discussed in the previous videos, that there is a due date by which every assessee is required to file his return of income, and that due date is specified under section 139(1). However, even if you don't file your return by that point, you are allowed to file a return of loss after that time. But if that were the case, then what is the incentive for me to file my return by the due date? None. And I would rather not file my return, get into the hassle of doing when I have all the time in the world. Just to curb this kind of a practice, specifically in cases where you have incurred losses, what does the tax law provide? Look at the second bullet. I'll just read it out for you. The following losses cannot be carried forward. We just saw what do you mean by carry forward. What do you mean by carry forward? If suppose in a particular year your net income is a negative number, then you are allowed to carry that negative number to the next year, and whatever income you earn during that year, you can set off this negative number against that positive number and pay tax only on the balance. This is subject to detailed rules as to what can be carried forward, for what time it can be carried forward. That's a subject matter of a different video altogether. But this is broadly the concept of carried forward. The following losses cannot be carried forward despite provision of chapter 6. Now, what do you mean by chapter 6? Chapter 6 is basically dealing with the cases of carry forward and set off of losses. So even if chapter 6 says that this particular loss has to be carried forward, that loss cannot be carried forward by virtue of this section, which is section 139(3), if the return of loss has not been submitted in time. Which means that if you have not submitted your return of loss within the prescribed time, then these following losses cannot be carried forward. So the return of loss has to be filed under 139(3) read with section 80. When you combine these two sections, what you get is that you cannot carry forward the following losses if your return of income has not been filed in time. The first one is business loss. If you have incurred a business loss, whether it be out of the speculation business or a normal business, if you do not file your return of income by the due date, then you are not allowed to carry forward your business losses. Capital loss. Income under the head capital gains, losses under the head capital gain. Any loss that you incur under the head capital gains is also not allowed to be carried forward if your return of income is not filed by the due date. And loss from the activity of owning and maintaining race horses. So I'm not getting into details of this particular thing. So these three losses, if you don't file your return of income, by return of loss actually, by the due date specified under section 139(3), then under that section read with section 80, your following losses cannot be carried forward. Now we move on to the third bullet. We just saw that there are only three kinds of losses which cannot be carried forward. I mean, under the head salaries, normally you would not have a loss. But what happens to house property? Can I carry forward house property even if I don't file my return of income within the time? Yes, following are unaffected even if ROI is filed after the due date. Income from house property is carried forward under section 71B and can be carried forward even if ROI has not been filed before the due date of return of income. Now, the genesis of this conclusion, I have kind of pointed out a conclusion to you. If you read that particular section, these two sections 139(3) and section 80, it applies only to those particular part of the section relating to set off and carry forward which relate to the following three aspects. Income from house property, which is section 71B, is not covered by these two sections. And the second is set off and carry forward of depreciation. Again, set off and carry forward of depreciation is governed by section 32, subsection 2. This is not governed by chapter 6. So therefore, set off and carry forward of depreciation, and because 139(3) restricts only chapter 6, set off and carry forward of depreciation, which does not form part of chapter 6, is governed by subsection 32 and subsection 32. And because it is not covered by the provision of section 80, it does not affect the carry forward and set off of depreciation. So what happens if you file your return of income? If suppose you're a company, you file your return of income after 30th September, then in that case, while your losses, business losses, capital loss, and the loss from activity of owning and maintaining race horses are not allowed to be carried forward, your house property income, and set off on carry forward of depreciation is allowed. Now, if you see the basically the last line which I've written, extension of time cannot be granted by the assessing officer. So the assessing officer do not have a right to extend the time by which the assessee can file the return of income. The time limit discussed in section 139(1) is a sacrosanct. The AO cannot say that, okay, you can file your return even after that date, and I will kind of allow you to carry forward and set off this depreciation. That is not allowed.